Hey, what's up guys? Welcome back to the channel. So in today's video, we're going to cover a company that is a play on the premiumization trend and the company that is the only manufacturer of PPF or paint protection film in India. So the company I'm talking about is Garware Hi-Tech Films Limited, and in today's analysis, we'll understand the specialty films or the high-tech films and the niche films industry. Then we'll move to a more company specific analysis. We'll understand the different product portfolio. We'll understand the business segments, where the growth has come from the last decade and where the growth is going to come from in the next couple of years. Then we'll move to result analysis of the Q4 results, where we'll look at the guidances, valuations, management commentary, and all of that. So on that note, let's start the video. So before we move on to a more detailed analysis, I just want to give you a brief about the industry, what the company does, so that along the analysis you don't get lost as to what specifically we're discussing. So Garware Hi-Tech, as the name suggests, is a player in the specialty films or the niche film sector, right? What specialty films do is that they do a specific objective or they do a specific task. In this case, there are paint protection films, there are sun control films, like various different types of films that do a specific job. And Garware Hi-Tech Films, if you look at it, the company traditionally, historically, used to be a manufacturer of BOPET, BOPET, that is like a compound vagara. So this used to be a very commoditized film, means that there was nothing unique or value adding about the film. Anybody in the world could manufacture this, therefore it was a very commoditized. And Chinese players, Korean players, the more low cost producers, they were consistently taking market share. So during this time, the company transitioned from a BOPET film manufacturer to a more value-added product manufacturer. So if you just look at its margins, right, the company, when it was making its BOPET films or more commoditized films, the company used to make around 6 to 10% EBITDA margins. But as the company transitioned to more value-added products and products like your sun control films, PPF, the EBITDA margin has expanded to north of 20%. And this VAP and this specialty films, that is one of the main reasons why, if you see, the company's top line has always kind of been consistently above 15-20%, but its PAT growth has significantly outpaced its revenue growth because of these specialty films or value added products mix. So that was a bit about the historical context, how the company has transitioned from a single digit EBITDA margin BOPET commodity film player to a more specialized film, more value added films that is now doing north of 20% EBITDA margins. So coming to the presentation, as I said before, the value-added products that used to be approximately 48% in FY17 has now expanded to 87% plus. Even you can look at it right here. The main reason why the stock re-rated, if I could just show it to you here, as the stock used to trade in the P of 10, 15, 4 single digit at times as well, teen say. So why the company ka price to earnings ratio expanded to 20 plus was because of this one reason only, because the company's value added products and the company transitioned into a more specific niche specialty films. You can see this across any companies, right? As the company moves higher up the value chain or does a more specialized, more value added products, its margins expand, profit growth expands, and basically stock re-rates. Now, Garware Hi-Tech, this is the only Indian player that is vertically integrated into manufacturing of SCF and your PPF. We'll understand what those product portfolios are, but for now, it is vertically integrated. Means right from raw material making to the end product making, the company does the entire value chain. Due to this, the company has better operating leverage, the company has better control over its raw materials, and the company has better margins. And another historical context is that when the company transitioned from a commodity film manufacturer to a specialty film manufacturer, the company focused heavily on exports. Right, in FY 25-26, exports were approximately 50%. Not just exports, but US market was approximately 50% of its revenue. And what happened in FY 26 was tariffs, and this was one of the worst hit companies. After Q2 and Q3 May, the company, after a long period of time, showed revenue degrowth. The company also withdrew its guidance and all that. So the company was one of the worst hit companies. But now that tariffs situation has evolved, the company has shown good results in Q4. So SCF, that is Sun Control Films, this is one of the leading products that helped the company's transition from a commodity player to a specialty film manufacturer player. Now what your sun control films basically do is that they help in reflecting UV rays and controlling temperature, right? And sun control films, they are used in two places. First is architectures, that is your railways, buildings, hospitals, any industry where there is a need for temperature control, or in general as well across multiple architectures to control heat, reflect UV rays. Second, it is also used in automotives, like you must have seen tinted windows, right? Tinted windows में sun control films आता है. Then you see whenever you drive a car and you see at the top of the window there's this green thing that is also called as your sun control films. So if we can see the sun control films, this is approximately 50% of the revenue, and this was the key catalyst in transitioning the company from a BOPET manufacturer, commoditized, to a more specialty value-added film manufacturer. Then there's your paint protection films. This is 25%. This is fastest growing, approximately 25-30 CAGR se the this segment is growing. Then there's your industrial products, shrink, packaging and all. And then there's the architectural SCF or the home solutions. This was about the sun control films. Now paint protection films. What paint protection films do, as you know, is that it protects the paint basically. It protects our paint from scratches. Let's say rock से scratches आया, गाड़ी ठोकी तो फिर वो scratches prevent करता है, and it helps keep the color clean, over a period of time. And what it also does is that protects your car from yellowing or whatever. And then there's different types. There's this titanium gloss finish, then there's the matte finish customization basically, right? So these two products are divided into two main business segments as the company has. First is your consumer product division, and second is your industrial product division. So if I just show you on the presentation, the company has the CPD, that is around 71% of the revenue. It has your automotive sun control films, architectural sun control films, PPF, Garware home solutions, your safety films. Then there's the industrial product division, right? इसमें it makes shrink film. Then there's the lidding films. Like you see जब something food packaging वगैरह में वो lids आता है, उसका packaging करता है. Then there's the electrical insulation, release liners, graphic and thermal films. This is a small part of the company, and this is more of a low margin business for the company. Electrical insulation, release liners, thermal lamination, paint, all of this product. There's the sun control film, and then there's the paint protection film. And the company का दो तीन business model है. एक is B2B, where the company directly supplies to your other businesses. Then there's the B2C model, where the company B2C or D2C, where it directly sells to customers. And there's another where it directly sells to your to your automotive OEMs and all of that. And FY26 में कंपनी का प्लान क्या है? कंपनी is aggressively scaling its CPD division, that is consumer product division, where it is directly serving your customers through their proprietary brands known as Garware application studios, right? Instead of selling to your detailing studios, it is directly selling. It is basically खुद का एक detailing studio लगा रहे हैं, and there they are offering PPF and SCF and all of the products we discussed right now. And you see why this company can do well is because of its market positioning. If you can see in the sun control films in automotive, it is the only Indian manufacturer. It has a 8 to 10% global market share, and the key competitors equal 3M, Eastman, and Korean brands. And what advantage the company has is that it has better margins because, as you can see, it is vertically integrated. So raw materials पे किस पे dependency नहीं. It makes its own thing. That is why it has a better margin and a better market positioning. Same goes for PPF, only Indian manufacturer. It has less than 5% of global market share, but the kind of growth that the company is showing, that is very impressive. Then there's your safety films, architectural sun control films, and you can see that paint protection films, they have the highest margin, and this is also the fastest growing segment in the company. So you can see how past may the VAP increased. Similar story is now being played where your PPF, that is your high margin product, that is growing at the fastest pace. And as I mentioned before as well, USA is approximately 50% of the exports. That is why it was worst hit. Then you have your Europe and Middle East. The company is targeting 30-40% growth. This is why, because Middle East mein, there are a lot of rich people. Rich people will obviously do PPF, because let's say if you're buying a 1 or 2 crore car, you won't mind paying 2 or 3 lakhs just for having better comfort, for having better protection for your car. So now this is the entire value chain of the company. What it does is basically your PTA and MEG, that goes through your polyester chip manufacturing. Then that undergoes BOPET film extrusion. Then there's the coating and lamination. Then there's SCF and safety film finishing. Coating and lamination say basically you transition that BOPET films into your high value or specialty films, SCF films. Then there's the cutting, QC, packaging, and then there's the export, or you can distribute it through your Garware application studios. And you can just go through this right here in order to better understand how the manufacturing process works, how the value chain works in detail. And in PPF, there's this thing called as TPU, which is basically raw material, and the company is backward integrating into TPU as well. When we see the capex plan, we'll understand why the company is transitioning or doing backward integration, because TPU import cost is approximately 30-35% of the PPF, right? So just imagine if 30-35% of my cost is fixed, my cost is stable, I can again have better margins. So just to summarize what we discussed till now, first is we understood the historical context of Garware Hi-Tech, how it transitioned from a commoditized BOPET film manufacturer to a specialty film, sun control film manufacturer. That is the reason why its 6 to 7% EBITDA margins expanded to north of 20 plus EBITDA margins, why its profitability grew approximately tripled from that time. We understood that there are phases of growth in the company. The first phase of growth was led by BOPET films, then it was led by your sun control films, value added specialty films. With that, we'll move to a financial analysis of the company. So if I just show it to you, first we'll understand the quarterly results. Quarterly results में company in FY 24-25 company used to grow at phenomenal rates, but ever since tariffs rolled in, company showed a bit of degrowth for the couple of quarters. But this was a turnaround quarter, as the company finally showed like 9% revenue growth, and even if you look at it, PAT growth was 40%. So this is one of the best quarters for the company given the context and the backdrop and the kind of performance company had shown in the previous 2 quarters. This is one of the best quarters for the company. And profit and loss, if you see FY27 mein company used to do 800 crores of revenue, that has expanded to 2100 crores, and PAT company used to do 22 crores ka PAT, that is expanded to 338 crores of PAT. So coming to the balance sheet of the company is essentially debt free. The company does not have any long term debt on its balance sheet. Reserves are also increasing at a good pace, and the company has cash equivalents of 155 crores in its bank, and the company is using this cash to make good investments in the future, TEP line integration, all of those capex, and all of the capex that was done in the past as well, that was funded through our internal accruals. This just goes to show the business model efficiency, right? Just because, and this is another thing that you should keep in mind as investors, because just because you have cash on the balance sheet doesn't mean you're a good company. अगर तुम बस cash लेके बैठे हो, तुम cash को deploy नहीं कर रहे, then what's the point of that cash? If you are using that cash to make investments, to expand your assets वगैरह, then going forward you can grow. But if you just have cash on the balance sheet and you're just sitting it, there's no point. You will not grow as a company. If you look at the cash flows, the company is basically like a cash machine. If you see, company consistently has 80% plus CFO to EBITDA, so there's no issue of cash flow in this company as well. So as we saw earlier as well, FY 2018 to FY 26 में the growth was coming from all of these products, and now going forward the growth will come from your sun control films, your paint protection films, graphic solution, Garware home solution, TPU products, and Garware application studio also. I think it has close to 250 stores, and the company is guiding that we'll do approximately 300 stores. And then there's Garware home solution, where it sells your sun control films, architectural wale, to your consumers, to different businesses. And as you mentioned, Garware application studio expanding into your CPD in Europe and Middle East. That is also another thing that can drive the next phase of growth. So now let's move to a result analysis of the Q4. And in this section, we'll understand the financials, we'll understand the kind of revenue growth guidance, the kind of valuations, the kind of commentary from management. So I have this dashboard made right here. So you can basically see 9% revenue growth, 23.6% EBITDA margins, PAT was up 40%. And what were the drivers of these results? First was your D2C margin. Direct to consumer business has a 25 to 30% higher margin than your normal products. So that is why you can see company is aggressively expanding into your consumer product division, directly selling to customers, because that has a very high margin. So the same thing that happened in the past, the company was moving into more high margin products. Same thing is happening right now. The company is moving into PPF, the company is moving into CPD, D2C. All of these factors that are the factors that will drive your next leg of growth or the next phase of growth. This is how you look at companies, right? And then there's the severe pricing power. Even though there was tariffs and all that, company was able to retain market share. The company did not see sales pure gaye. Company saw a slight degrowth in sales, which is understandable. Like if you are exposing 30-40% tariffs, of course my business will get affected, but the company controlled the extent to which the effect was there. Then company has pristine balance sheet. Then there's your architectural film explosion. Those sun control films, they are finding more and more applications in railways, hotels, airports, your homes, etc. So इसका भी application बढ़ रहा है, more and more revenue streams are coming up for the company. So basically your TAM is increasing. Then there's the MENA region expansion. Company is doing Europe, Middle East में company is doing expansion. Now let's look at the future growth and the key performance indicators. So capacity utilization, company was doing 80% utilization. FY26 में company did a peak utilization, and FY28 में company is adding new SCF line, right? So now an analyst rightly pointed out to the con call as well कि Sun Control Films, they are running at approximately 75-80% utilization, whereas your paint protection films, they are running at 90% utilization. So अगर आपका PPF ज़्यादा utilization पे चल रहा है, then why are you doing expansion in sun control films? उस पे management का reason was that SCF is basically like the cash flow machine, and SCF, that is sun control films की जो capacity है, that is fungible. So if you need, you can use that SCF की capacity for PPF manufacturing as well. Whereas PPF की अगर capacity डालोगे, that can only be used for PPF, but SCF की capacity can be used for both the divisions. That was the management's rationale behind doing a SCF capacity expansion. So if you see, 50% of its revenue was from SCF, 25% was from PPF, and 25% was from your IPD. Then SCF, paint protection films, this you can also read this to understand the con call में जो बोला था. So next, coming to the capacity tracker and the capacity expansion plans, company has Garware Application Studios, that is your D2C brand with high margin. It is scaling from 250 stores to 300 plus studios, and the main purpose is to capture the domestic PPF का market. And P&L में क्या impact आएगा? Higher realization per square feet, brand awareness वगैरह. So PPF भले high margin है, CPD में आ रहा है, so it is even more high margin. Then company is doing backward integration, as you mentioned. TPU is a raw material for PPF, that is approximately 30-35% of its raw material. So the company is doing backward integration because TPU is imported, currency risk होता है, and all these factors. TPU का full form है ये basically, and the company is doing deep integration to produce raw material base for high-end PPF manufacturing. Then there's the new sun control film line. This is the one of planned heavy capex for FY28. The company is adding approximately 1200 lakh square feet of capacity and doing 191 crores of capex. This will be entirely funded through internal accruals. That is another good factor, that company is putting the cash to good use, because current lines are at 80% utilization, and they can fungible, these are fungible, that means it can be used for PPF too. Commercial production will start by Q1 of FY28. This is the primary growth engine for FY28. 30% से company is increasing its capacity. So going forward, FY28 में SCF can grow by 30% plus as well, assuming we have a full utilization. Then there's global studios and home solutions. That capacity is to target global, is the brand that is used in exports. So export में Garware Application Studio India में कैसा है, वैसे ही बाहर global studios है. And then there's the Garware home solutions as well. Direct retail penetration in the US and UAE, and tier 1 Indian housing. Another reason why this can do well is because you see sun control films, PPF, all of these target the high end or the tier 1 consumers who have a lot of money, basically targeting rich people. And as we know, rich people do not have a shortage of money. So इसमें there's no risk कि pricing pressure आ गया वगैरह. If the guy is buying a 1 or 2 crore car, he won't mind paying 2 or 3 lakhs extra for his car. Same thing for the home. If he's buying, let's say, a 10 crore house, he won't mind paying a couple of more just to have more better comfort in his house, have better windows, and sun control रहेगा, तो फिर he won't mind paying that. And execution कब आएगा? Q4 FY26 में 26% EBITDA margin, and 26% EBITDA margin, and the D2C strategy is driving a margin expansion. Then October 2026, that is Q3 of FY27, the TPU backward integration will come up live. That will start showing in your profit and loss. Margins will become better. And FY27 के end में the F50 Garware home solution nodes and the 50 global studios will be live. And this is one of the factors that can lead to the top line target of 2,500 crores. And Q1 FY28 में there's the massive sun control film capacity that is coming up live. With that, we'll move to the valuation and projection section. So the company is growing to grow top line at more than 2,500 crores, approximately 18% plus. But when I attended the con call was extremely positive, and based on the management's commentary वगैरह ना, I think the company can easily grow north of 20%, because the kind of growth triggers the company has. Once your D2C expansion, your CPD, your backward integration kicks in, the company can grow its bottom line aram se north of 25-30%. This is just my personal expectation. I'll have to review it on a quarterly basis if that is holding true. So base case mein company is targeting 18% top line growth, EBITDA margin of 25%. That will lead to a PAT of 625 crores. Sorry, EBITDA of 625 crores and a PAT of 420 crores. So according to that, the company ka forward P is coming at around 30 times. And if you look at bull case mein 25% top line growth, which I think is achievable for the company, and a 25% and 26% EBITDA margin of 670 crores, and your PAT becomes at 465 crores, we come at a forward P of 26 times. Now there's a bear case as well, like 6% top line growth, tariffs का वापस कुछ आ जाता है, then the company is available at 40 times, then the company becomes a no-go. And this is also one of the reasons why I think Garware Hi-Tech is a good bet. Like if you see 25% times earnings, companies guiding to grow at 20%, companies available at 1-time PEG ratio. So given the kind of growth prospects, the kind of moat the company has, the only integrated manufacturer of PPF and SCF, I think Garware Hi-Tech is a very good deal right now. And personal disclosure that I have been building portfolio. I have been building position in my portfolio ever since its Q4 results. So that's a disclosure. I am not a several analyst. My opinions or my analysis can be wrong. I'm just sharing my analysis so that you guys can form your own analysis, take your own decisions whether you want to invest or not. But I just have to say that I have been building position in this company. So make sure you consult a financial advisor or whatever. With that, we'll move towards the end of the video. So what we saw in today's video was we first understood the historical context of Garware Hi-Tech. We understand how it transitioned from a commodity BOPET film manufacturer to a specialty film manufacturer, how its EBITDA margin expanded from 6% to your 20% plus, how its P ratio also expanded from 8 to 10 times to 25-30 times. Next, we also understood the company ka product portfolio, your CPD business, your IPD business, sun control films, paint protection film, shrink films. And then we also understood what are the growth triggers going forward, D2C expansion, your backward integration, PPF exploding, capacity expansion, all of that. Next, we looked at the capacity tracking, companies adding good capacity as well, which will drive the next leg of growth. Then we saw the guidance, companies guiding 18-20% top line, but I personally believe company can grow north of it. Company can grow its PAT or bottom line by 25% aram se, and the company is a great deal at approximately 1-time PEG ratio. So that was it for today's video, guys. I hope you liked the analysis, hope you liked the video, found it informative. And if you found it informative, make sure to like, subscribe, and also comment down below what was your favorite part about the analysis or your input. And I'll see you guys in the next one. Thank you so much.